Hey traders, Raghee here, and for today's update, look, all eyes are on FOMC, and then after that, all eyes are on non-farm payroll. But we've got to get through Powell, a half-point rate hike, and the presser, the statement and the presser, before we get to the jobs number. And so for those of you that may not be aware of what the expectations are around rates, they are absolutely a half-point hike going into tomorrow, and maybe even a half-point hike going into June. Now, I mentioned May and June because if for whatever reason we just get a quarter-point hike tomorrow, the equity markets are going to rip higher. Chances are no. The FOMC is not going to look a gift horse in the mouth and say, look, the market is expecting us to hike by a half point. We need to kind of get on the gas with these rate hikes. They're going to take that opportunity, and they're probably going to take that opportunity in June too. However, that does leave a little bit of a window for Powell to either purposefully or accidentally sound a little less hawkish, a little bit more flexible, a little bit more accommodating about the pace of the hikes. And gang, the hikes are going to keep on coming. Please know that. Because when we start looking at the probabilities going into May of 2023, by the time we get out there, we start talking about May, June, July of 2023, there is, although not a convincing probability, but there is a probability that we're going to be somewhere between 350 and 375 on the interest rate. That's 3.5 to 3 3/4 points on the central bank, the Fed funds. So I know that seems far away. It's a year from now, 14 months from now. But this idea of one and done, this idea of the Fed isn't going to hike because equity markets are down, yeah, that might have been true, but they've got far bigger problems on their hands than stonks going lower, okay? So don't get suckered into a narrative that says they're not going to hike rates. Bonds know they're going to hike rates, whether that be ZN or ZB. Again, the opportunity is not in trying to find a bottom in a downtrend. That's low probability. That's bottom picking. I mean, imagine. Think of the visual around bottom picking. I don't want to be a bottom picker. I don't know about you. I don't think any of us want to be. What we do want to wait for is a catalyst for a correction. What's a catalyst for a correction? FOMC. Again, if he even sounds like he's ready to tap the brakes or is open to it, right? That's going to send the interest rates and even the equity markets higher. That is where we want to get short the 10 and 30-year futures contracts, or if you want to go the ETF route, 10 years IEF, the long bond is TLT, right? So if we get any kind of movement higher towards the 21 exponential in the interest rates, go for it. I want to also be really aware of potential opportunities to reshort XHB and ITB. Absolutely open to that opportunity. There are also, for grain traders out there, keep an eye on the 21 exponential in corn. That's another buy the dip. Don't let anyone out there tell you that buy the dip doesn't work. Those are people that don't know how to buy the dip. Buy the dip requires an uptrend. If you've been watching me in these free videos or even catching me on the Charts and Coffee morning show, we do free at the Simpler Trading YouTube channel, you know buy the dip works, right? You know that we just have to make sure we're buying the dip in an uptrend, right? So be sure to grab the tools over at countdowntrader.com where you can have the grab candles, the wave, and the Darvis. And that way you've got a better idea of what markets are bullish. They're going to be dominated by green grab candles like corn is. And if you want to play corn through its ETF alternative, that is the aptly named CORN. There's a lot in play here, gang. And I'm going to throw one crazy wild card out there. And that is, and I'm not taking this trade, but I'm just mentioning that under any other circumstances, we have an oversold Darvis support minor low pattern that is broken out, right? So we have this possibility for movement higher in the S&P off an oversold price zone and the low on the slow stochastic. What's interesting is, look, we know that once we go into FOMC, FOMC doesn't care about my candle pattern. It doesn't care about my secret squiggle. It doesn't care about my Darvis levels. If Powell, for whatever reason, though, does not sound as hawkish as traders and investors fear, we could get a little bit of a sigh of relief rally, which, by the way, with the minor low breaking through higher through the Monday high of 41.65 3/4, it sort of cracked the door open there. So again, I don't want to buy this. I just want to show you that under any other circumstances, we'd be getting long S&P or S&P calls, right, in this scenario. I wouldn't be surprised to see a little bit of follow through. We'll see what happens. But in the meanwhile, if we get that rip higher, it's less about buying the S&P and more about on that move higher, can we short the NASDAQ? Can we short XLK? Can we short XLC? What are those weak corners of the market? Even XLF now, gang. So rather than picking a bottom in a downtrend, let's see if the movement higher can give us an opportunity to short. I hope this gives you a lot of interesting ideas moving forward into the FOMC. We want to take advantage of the aftermath, not guessing in front of Powell, but taking up advantage of the volatility that he creates. We'll talk about this and a whole lot more at the Countdown Trader tomorrow, 9 a.m. at the Simpler Trading YouTube channel. Looking forward to seeing you there. And if this content's moving the needle for you, gang, if it's helping you find a little bit of focus and a little bit of clarity in what's been an interesting market the last, say, 7 to 10 days, smash that like button. And if it's still kind of confusing, if you're feeling that, yeah, Raghee, I've got a decent picture, but it's not clear quite yet, leave a question, leave a comment down below, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.